specifically here for a large importer like India. Let's take some of these points to Aditya Narain. He's Head of Research Institutional Equities at Edelweiss Securities. Aditya, always a pleasure to have you here on the show. Great to chat with you. Your thoughts, Aditya, what we saw on Friday, and does it kind of tell you that maybe one needs to be a little cautious now at the margin?
Yeah, quite frankly, I think the big caution is the level of outperformance that India has shown. You know, you ran through those numbers, whether it is on a weekly basis or a monthly basis or on a YTD basis. I think the risk just is very predominantly a market outperformance risk, given that, you know, at the underlying level, there hasn't been any real delta either in India or globally. There's a lot of debate. You've had some data points, but none of them have been very, very stark. So I think the challenge at this point in time, quite honestly, is the level of outperformance that India has shown. And that will just make you more vulnerable to, you know, what happened in the last couple of hours or for a more extended period, where the fact that between performance and you know, therefore valuations also being more stretched makes you just more vulnerable to any bad news, any event, or any disappointment that comes through. You know, when markets have outperformed so much and are at such a level, it requires a little bit of a trigger, and you'll have plenty of people saying, "I told you so," which then tends to become a more vicious cycle.
Aditya, what does one do then? You know, there would be a lot of people feeling the fear of missing out. You know, do you think committing money at these levels would perhaps be a lot more risky than what it was?
Well, typically the higher you go, the riskier it gets, right?
Yeah.
So I think that is just a very simplistic adage. The fact that you've had a fair amount of domestic capital raising, you know, in mutual funds, which have been pretty broad-based from what I gather, does suggest that at some level, you know, there is just a little bit of a reallocation that is happening between fixed income, between the sense that equities can return much more than a lot of other asset classes. So I wouldn't get too much into the timing of the market, but the reality is the higher it gets, quite honestly, the riskier it gets. But, you know, as I kind of mentioned, I think historically what has tended to happen is the big investors who moved it and have been more timing sensitive. Since the nature of money coming into the market has been a little broader, this risk, while it exists from a performance perspective and from a timing perspective, does not necessarily translate into the same kind of outflow risk that might have happened a couple of years ago, you know, if you had a situation where you came in early and markets went down.
You know, the stock of the week, of course, was Z, right? I mean, it began being the stock of the week and it continued 40%, right? A big re-rating. But what happens from here on? There is still a lot of interest, lots of questions. Nisha is here with a quick overview on what to watch out for. Nisha.
Thanks for that. Yes, sources with direct knowledge have shared with us that it's not going to be an easy fight. There are a few aspects and a two-pronged strategy that SL Group is working on to combat the attack by its investor, Invesco Oppenheimer. Now, what I do gather from sources with direct knowledge is that they are first of all also speaking to the shareholders to garner their vote share, because ultimately, if the EGM resolutions are put to vote to oust Puneet Goenka as the MD and CEO of the company and to reconstitute the entire board, the shareholders will have to get a 50% vote for or against the EGM resolutions. The second bit is that of a white knight. What sources with direct knowledge have shared with us that SL Group is scouting around and speaking to several investors to get some investor support to pump in money and even launch a voluntary open offer to get support and counter Invesco. Now remember, in 2019, when the company was under immense crisis and the lenders wanted to take away control from SL Group, they had brought in Invesco Oppenheimer, and whether or not they can pull the same stunt again needs to be seen closely. It's a widely held company with several participants, and remember, share positioning will also take place ahead of the due date or the record date for the EGM. So 21 days for the board to call for an EGM and another 21 days to really execute. And before the record date, whoever takes the positions on stake will have a voting right. Rakesh Jhunjhunwala had bought 0.5% stake. BofA Securities had bought 0.5% over and above 1% they had. And LIC is one large shareholder. So this vote will be closely watched.
Nisha, thank you very much for that. Aditya, any thoughts on how this will play out? Credit Suisse says that this is headed towards eventually the ouster of the current managing director. There'll be new guys running the show, and that means continued re-rating. Would you agree?
You know, I wouldn't get into how the mechanics of this would play out because, quite honestly, I think it's stargazing at this point in time. There are too many variables in terms of how it will effectively play out. What I would say, though, is that from a shareholder perspective, I think this is a very distinct positive. You've seen it in the stock performance. But I do think this is a larger underlying trend that has already been set in motion in the market, but I suspect it is only accelerating with this event, which is if businesses are not doing well, you know, managers and owners will be scrutinized much more closely, and I would say a little aggressively. And if stocks are not doing well, right, which is not necessarily a management related thing, but if stocks are not doing well, I think you will get more shareholder activism. So I think to that extent, from a broader market sense, I think this is a positive development. And I think we're going to see much more of it, right? If you step back, I think one of the reasons why you saw such a significant stock performance was, you know, not just the fact that the valuations were low, but the fact that it's actually a good business that has been cleaned up pretty aggressively over the last couple of years. The incumbent management has been working to really fix it. And so to that extent, you get a business where there is low ownership, people have not made money on it, the business is doing well, and the stock is cheap. And you could get more such, you know, and so there's a natural path that has taken place, which I think you hadn't seen enough of in the market. And I would tend to believe that this direction overall from a shareholder perspective, from an accountability perspective, is positive and, you know, is fundamentally good for shareholders.
Right, Aditya, you know, the other stock that was actually the one of the week was closely following Z in terms of its movement as well. Z was up 40% this week. This one was not bad, up 33% this week. You know what I'm talking about. It's Vodafone Idea. It was in focus after the government's telecom relief package was announced, giving it a lease of life for at least the next 4 years. First, let's go across to Rima, who joins in with all the details, and then we get Aditya's view on that one as well. Rima.
Yes, Vodafone Idea was clearly the stock of the day, though on Friday it ended 10% lower from its intraday high. The news, as you said, a 4-year moratorium on the telecom dues, which means Vodafone Idea is looking at cash flow savings of about 24,000 crores on an annual basis. Two key things to track going ahead. One is price increases. Now, for the company to meet its dues after 4 years, they will need to see a substantial improvement in the average revenue per user. And secondly, is the company now successful in raising the 25,000 crore of money that it was looking to? And will the promoters now have the confidence to infuse money or equity into the company? That remains to be seen. If Vodafone UK or the Birlas participate in the equity fundraise, I think that will provide a lot of confidence to investors.
All right, whether that happens or not, you know, the important part will be whether there will be bipartisanship in the industry itself. Sunil Bharti Mittal, founder and chairman of Bharti Enterprises, the leader of the telecom sector, called on his competitors to set aside the fierce rivalry and come together. He said that he's already spoken to Vodafone's Nick Reed and will reach out to Mukesh Ambani. Listen in.
I was glad to hear Mukesh Ambani yesterday in his statement say it's time for the industry to come together. I would like to take a lead in ensuring that the industry works closely together. I have reached out to Nick Reed yesterday. I spoke to him. I will reach out to Mr. Ambani, speak to him, and ensure that the industry truly becomes the role model for many other infrastructure industries in the country.
Well, Aditya, do you still think telecom is best played via Bharti, or Vodafone now offers some juice after this 4-year extension that it got in, so to say?
So I think there are two parts. So I'll come to your question, but I think the bigger thing is, to fix this whole issue, there was a government element to it in terms of relaxations. And there's a market element to it, which is basically in terms of pricing going up and the business generating enough profitability to service their debts, right? I think on the government bit, I think you've got what people were hoping for and what people were expecting. As far as the market bit is concerned, you've got, all the telecom leaders have kind of welcomed it. Mr. Mittal, just on your show, basically said that we're looking at ensuring sustainability, which I would translate into better pricing. So I think if all of that flows through, I think it's obviously going to be better for the system and it's going to be better for Vodafone also. In terms of which stock to play, from our perspective, we would still stick with Bharti because until we see the change in the ARPU dynamics and the pricing dynamics as far as Vodafone is, as far as the telecom market is concerned, there'll still be a little bit of caution as far as the stock is concerned. And because the debt on its books is still very, very high. The operating leverage and therefore the cash flow sensitivity and therefore the stock volatility will all tend to be very, very high, right? So in our minds, we don't have enough certainty on how this whole resolution will play out. And so to that extent, we would, at this point in time, choose to be with the surer and the straighter kind of play, which is Bharti, right? Because I think you're heading in the right direction, but a lot still needs to happen. It needs to happen at the market level, and as a corollary, it needs to happen at the shareholder level, which is whether it is capital that's raised from the outside or from the existing players. I think those are steps that still need to be trod on, and we would tend to be we tend to play it a little safer at this point in time.
Aditya, it's a pleasure. Thank you very much for joining us with those thoughts. Always appreciate you, sharing your insights with us on what mattered this week, markets, and of course the two big stocks of the week, Z and what happened in the telecom space, Vodafone Idea especially. Thank you. We'll take a very quick break here. We are back. We focus on technicals when we come back. Jai Bala of Catch the Chaos in just a bit.